So I thought it would be interesting to make this video. A subscriber sent me his trades for the past 3 months, and honestly, I was impressed. He deposited 16,900 and made a total profit of about 14,000 Canadian. Could be worth more depending on the conversion rate you use. So 14,000 of profits over a capital of 16,900 is almost 100% return in 3 months. Started trading around the beginning of June, I think. So June, July, August, so 3 months. So I thought it would be interesting to go through the trades. I think it would be useful to learn something from the trades, see how aggressive this trader was, see if it's actually something that anyone can replicate. And obviously, I don't know the exact thought process behind every trade, but I'm going to try my best and assume. And at the same time, I'll be giving my opinion on these trades. So one thing, or the first thing I noticed is the P&L per trade. So you can see that this person started off with small profits, 65, 47, then $200 profit. And then all the way here, he's up to $583 profit, but then started making losses, started incurring losses. And a big loss, a loss of 328 while he was making profits of 60, 50, 50, 200 was his biggest profit starting out. And then all of a sudden he got a $300 loss. So that could be a little bit discouraging. Maybe might make you change your mind about this whole strategy. So if we add up from the beginning to these 3 first losses, you could see that this person is now down to $82 profit from the beginning. So they had 583, and then after a few losses they're down to 82. So that could be a little bit discouraging. So something that is impressive is that this person continued trading even after seeing most of his profits being wiped out. So after that, continued trading, made $100 profit, 50, 44, 154, and you could see at the beginning it's always one contract. And in fact, it seems like this person had high commissions, was paying $9.95 to open the trade, and then $1 per contract. So it wasn't signed up to active trader pricing yet, but was still making profit. So 41 net for the first week, 214 for the second week, and then a $400 loss for the third week. So actually, after commissions, this person after the third week was down $145. So definitely most people would have given up on this strategy in this situation, but this person kept going. So $50 profits, $40 profit. I mean, look at this, $44 profit, but $23 commission. That's very annoying. Half of your profit is gone in commissions. But now started increasing contracts, two contracts. Profit is higher, 150, $40 loss, $286 profit. So close that week with a 565 net profit, even with these crazy high commissions. So now, after 4 weeks, this person is at $420 net profit. So it's a good thing that they kept going. All right, now back to one contract. So $40, $45, and then started increasing contracts, 2 contracts. Had a big loss here of $518. And then more trades, 3 contracts, 2 contracts, $360 profit, $278, $104, $216. Some big numbers here right after that $518 loss. And then some more losses, $108, $52. Still was able to close the week with a net profit of $554, even with these high commissions, still paying $10 per trade. So actually made $913 gross, but spent, I think, almost $300 in commissions. Yeah, $358 in commissions. So that really hurts. So after week 4 or week 5, this person has a net profit of $974. So once again, good thing that they kept going. You could see that commissions dropped drastically. So they signed up to active trader pricing, and now they're paying $5 per trade and 75 cents per contract. So big difference in commission here. Back to 2 contracts, 1 contract, 2 contracts, 3 contracts. So decent profits, 190, 152, 198, 120, and then a big loss of 722. That's not too encouraging. So I'm going to go over this trade afterwards, but I just want to show the P&L first. So 722 loss, 114 profit, and then some more losses. So this time ended the week with a loss of 330. Couldn't run away from a loss there. 2 big losses here. Actually, I'm just curious to see. It was a call spread on Disney. Okay, we'll go see the details after. All right, so right now after week 6, this person has total net profit of 644. So still in profit after 6 weeks, but definitely that last week took a big chunk out of his profits. All right, so the following week, so the first week where he had active trader pricing, he actually lost. So Probably blamed it on commissions, or probably not. All right, so the second week after signing up to active trader pricing, still doing 2 contracts, 3 contracts, 2 contracts. So on average, he's doing 2 contracts. So $90, $94, $400 profit. That's a good one. $174, small loss of $30. Profits between $100 and $200. So closed this week, as you can see, with $1,700 profit, USD net profit. So placed more trades. Seems like a more consistent amount of contracts. So closed that week, August 14, closed it at 1729 US net profit. So now after 6 weeks or 7 weeks, this person has a net profit of 2,373. So pretty impressive considering that the first 3 weeks, this person was down $145. So let's look at the following week, August 21st ending. So first trade was a $20 loss, and then 102, 192, 250, 140. So always 2 contracts. Some are 1, some are 3, but mostly are 2 contracts. So about $200 profit per trade on average, or 150 about. Many more trades, as you can see, way more trades than before. So actually made 22 trades in that week, while the week before made only 12 trades, and the week before that only made 11 trades. As he's moving forward, he's actually making way more trades. So ended up closing that week of August 21st with $29.52 US net profit. Spent in commissions, spent $351 in commissions, so way better. So 22 trades and only spent $351 in commission, while his last week before active trader pricing, he spent about $358 in commissions, but only had 13 trades. So you can see the difference between active trader pricing and not having active trader pricing. That's actually kind of cool. He actually had a gross profit that week of $3,304. So pretty good, given the fact that he's only using $16,000 in capital. But definitely to be placing 22 trades and almost 2 contracts each, if he's doing 5-point wide spreads, which you can see he is doing 5-point wide spreads most of the time. Sometimes it's 10-point wide. So let's say every trade requires about $500 in capital. He made 22 trades, and most trades had 2 contracts. So that's about $22,000 of capital requirement. So it looks like he's using most of his capital every week placing these trades. So it's good when the market is rallying, because most of his trades are put spreads. But I guess the day when the market turns around, it could be a little bit dangerous if all your capital is used. Now, he wouldn't lose all his account because he actually collected credit for his trades, and he can also manage the trade before expiry by reducing max loss and selling a call spread against his trade. But before that happens, he's actually generating a good amount of profit before that happens. So even if he has a losing week, it won't be as much as all these winning weeks he had with decent profits. So right now he's sitting at around $5,326 net profit with all these trades. So once again, not bad given that the first 3 weeks he was down $145. So $29.52 for the week of August 21st. Let's see what he did for the week of August 28th. So started doing 3 contracts, 2 contracts, 3 contracts, 1 contract, 5 contracts. But as you can see, all big profits here: $300, $255, $134, $186, $255, $264. And let's look for the week ending August 20. Way more trades, of course. So week ending August 28th made way more, probably a record week, $39.37 net profit, gross profit of $4,569, and made 31 trades. So definitely using all his capital, but being way more active. And as you can see, some of his trade expired worthless, but most of them he is paying back and closing them himself, not necessarily waiting till expiration. So how much did he spend on commissions for that week? That record week of his of $39.37, spent about $632 in commissions. So he's actually getting his $89 a month of active trader pricing package reimbursed him because he's spending over $400 in commissions per month. So definitely a good deal for him. Net profit, 39 US. So for us Canadians, that's even better. So now since he started back in June, now he's got a total profit of 92.63 US net profit. So once again, I repeat, most people would have given up at this 3rd week. I probably would have given up at this week if I started a strategy and I see that after 3 weeks I'm I wiped out all my profits of the previous weeks, I would probably say, oh, this is just going to repeat itself. There's no point continuing. But this person made some adjustments and increased some contract, did more trades, reduced his commissions, and as you can see, the progress is now at 9,000, sitting at 9,000 US after 8 weeks of trading. So he's had a record week of 39 here, 39.37 for the week ending August 28th. Now for September 4th, we're still in that current week, but these are his closed trades. So you can see that his closed trades for the week of September 4th is about 995 gross profit or 878 net profit. Still has some trades open that haven't been closed yet, or at least I don't have update on them. But yeah, so you get a good idea of the P&L and the progress of the P&L. Now let's just go look at some trades here. Might be too much to look at every trade, but let's just look at how he started and how aggressive are his trades, which strike prices he chooses, what are his strike price selections. All right, so let's look at the first trade, or not necessarily the first trade open, but the trade that expired the first was the one with July 2nd expiry. So made a $41 net profit. It was a put spread on Microsoft at a 195 short strike. So let's go see what Microsoft was trading at June 29th. So June 29th, Microsoft was at around 198 and he had a short strike of 195. So only 3 points away. So as you can see, a little bit aggressive, but also probably only had a few days left till expiry. So still only collected 65 cents and actually collected $1. So basically, if you're collecting $1 on a 5-point wide spread, you're probably at around a 30-40 delta, maybe even a little bit higher. So a little bit aggressive on the strike selection, a little bit close, not as far out of the money. Regardless, still made a profit even with these high commissions. So that's the first week. Second week was a SPY put spread, my favorite, 289, 294 put spread, collected 86 cents. So right away, 86 cents off the bat is pretty high, unless VIX was high that week. So collected 86, closed it for 39, 47 profit, but commissions ate half of it. And then, so June 29th, he had a 294 short strike on the SPY. So let's just go see what SPY was trading at June 29th. So it's trading at 304. So actually that strike was pretty good, pretty far from the current market price. So this was June 29th, expiring July 6th. So this was 7 days till expiration. So good trade. So maybe I'll choose the big amounts and then I'll choose the big losses. So the big profits and the big losses, I'll go through them. Otherwise, it's going to be too many trades. I don't think everyone's going to be listening to all these trades. So Iron Condor, SPY, June 16, open June 16 with July 10 expiry. So let's just look at so open June 16 with a July 10 expiry. So that's pretty far out. That's almost 30 days. So collected $2, had a put spread of 303, 298, and a call spread of 325, 330. It could have been a put spread, started off with a put spread and then made some adjustments, added a call spread after, who knows, but that would be my assumption. So collected $2 and actually ended up letting it expire worthless. So that was a good trade, made a total profit of 203 after commissions, and based on commissions, yeah, it expired worthless. Actually, based on commissions, you could see that he only had to pay $9.95 once. So that probably means it was open at the same time. He opened this trade as an Iron Condor. It wasn't an adjustment that he did later on. So made a net profit of 214 that week. So starting off, he's probably happy with his results. Doesn't know that he's about to encounter some big losses. So let's go straight to the 328. What the hell was that 328 here? It was a Netflix put spread, the famous Netflix. All right, so open July 10th with an expiry of July 17. So same week expiration. So 7 days to go. Open on Friday and expiring the following Friday. A put spread. So right away, I don't necessarily like going over the weekend because I know crazy things happen usually over the weekend. I do go over the weekend with the SPY, but that's because I've back tested it and I know that if I go out of the money at a 20 delta approximately, or a 20% probability of in the money, I know that there's over an 80% chance that my short strike expires worthless. All right, so Netflix put spread, which one was it again? I think it was this one. Open July 10th with a 510 short strike. I think this was after earnings. Collected $1.64. So 510 short strike, July 10. So So let's go see what Netflix was trading at July 10. So July 10, Netflix was at 548. So that's actually a good strike. It's a fair strike. I think it's far out of the money. But I guess Netflix took a drop between July 10 and July 17. Yeah, July 7. So it looks like he held it till earnings. I don't know if he was aware that there was earnings, but July 17 it had earnings, so it dropped on Friday. He probably wasn't able to close it before earnings because it dropped a little bit from when he opened the trade on Friday. So that's the risk with opening a trade before earnings. You might not be able to get out of it, and then you're going to have to go through earnings announcement. And in this case, Netflix took a drop below his short strike. Now let's see how he managed it. So he collected $1.64. He ended up closing it for $4.92, so max loss. He could have sold the call spread, but maybe the call spread had no value on Friday because it was the last day. But he could have sold the call spread to collect some free credit. Regardless, closed it for $4.92, so P&L of a loss of $3.28. So yeah, that's one of his biggest losses. Let's look at this one also, a $150 loss. It was an iron butterfly on Netflix. Opened on the same day, opened July 17, closed also, so with an expiry of July 17. So collected $325, closed for $475. I think this was probably a revenge trade when he saw Netflix drop so hard. So these two trades were open July 17 and closed July 17. So probably trying to manage Netflix on the same day when it dropped really hard after earnings. So this is an iron condor, opened for $473. I guess it was had to close it for $496, so took a small loss on that. So these losses could have been avoided. This one here, usually I like to wait a few days or the same day of earnings before placing an earnings trade. But usually if you go through earnings, if you're picking an expiry that has earnings before it, then there is the risk that usually stocks run up towards earnings, but sometimes they do drop before earnings. And if you do that, then you're stuck. All right, so let's look at another big trade here. So let's look at this one, $286 profit. Did two contracts. What was it on? It was on Netflix. Opened July 23rd, closed July 24th. So this is a one-day trade. 475, 480, 495, 500. So it looks a little bit aggressive. Collected $2. I don't think I would have done that trade personally. Kind of aggressive, but collected $2 knowing that he's risking only $3. But he's doing two contracts, so he's actually risking $600. But he was able to close it the next day for 60 cents. So that was a good trade times two contracts. So that's why $286 profit. So opened July 23rd. I just want to see what Netflix was trading at July 23rd. It was trading at 477.58. It seems like his put spread was in the money to begin with, unless this was an adjustment. So let's go look at the commissions. Yeah, multiplied by 2. So it looks like it was initially a put spread that got tested, turned it into an iron condor. So most likely it was a put spread of 480, 475. It got tested, so he sold an iron condor a little bit. He sold a call spread to reduce max loss, and then Netflix happened to move up a little bit on July 24th, so was able to close it for 60 cents. So that extra credit from the call spread gave him a nice profit. All right, let's look at the $200 profit, and then let's look at the $518 loss. So the 210 profit here was two contracts, and it was on Apple. So it started off as an Apple put spread. That's good. Collected $1.80. So that means he's pretty close to the current market price. So July 24th, with an expiry of July 31st. So it looks like crossing the weekend again. So 7 days. So 362.5 short strike. Let's see what Apple was trading at July 24th. So Apple was trading at 92, but this is after the split, so times 4. So Apple was trading at 371, and he opened a put spread at 362, so pretty close. I'm pretty sure that was like a 35 or a 40 delta. Just based on how much you collected, almost maybe 50 delta. Well, not a 50 delta, but $1.80 is pretty high for this trade. So he was able to close it for 75 cents, so he didn't wait till expiration and made $1.05 profit times two contracts, so $210 profit. So as you can see, he's placing a lot of put spreads, and then sometimes using call spreads to mitigate his put spreads that get tested, but he's just placing more and more put spreads. And I'm assuming on stocks with high volatility. You've got Spotify, PayPal, Facebook, Visa, Apple, MasterCard, SPY, IWM, Netflix, Tesla. So let's look at that big loss here, $518 loss. So it's on Facebook. I usually like Facebook. All right, so It's a call spread. Yeah, there you go. Call spreads. I never liked call spreads. They always get tested for me. All right. So 247, 252 call spread on Facebook. So basically he needed the stock to stay below 247.5. He collected 91 cents. So that's okay. That's decent. And so from July 28th to July 31st. So it's the same week from Tuesday to the Friday. So maybe not sell a call spread with not a lot of time left, because that means he had to be really close to collect 91 cents with 3 days remaining. He collected 91 cents. He must have been really close. So let's look at, so 247.5, July 28th. Let's see what Facebook was trading at. So it's trading at 230, but then it jumped to 253 July 31st. I don't know if it had earnings. Yeah, if it didn't have earnings, then this was just bad luck, because July 28th Facebook was at 230, so a 247.5 short call is fair. Yeah, 247.5 is 17.5 points away from 230. So the fact that it got tested probably means that there was earnings, or just got unlucky and the stock really jumped hard that last day. Maybe he had a chance to close it before though. July 28, 230, July 30. I know it kept going up day after day. Yeah, so just unlucky. So from 91 cents he collected 91 cents, ends up closing it for $3.50. But he could have sold a put spread against it on that same day to maybe reduce max loss, instead of just closing it straight out. So open for 91, closed for $3.50, and he did two contracts, and that's why $500 loss. So let's look at this profit here, $362. It was a UPS call spread, so that's good. Finally, a call spread that becomes a winner. 261, so this is definitely very close. From July 30th to July 31st. I don't know if these were together. This looks like a put spread, also July 30th to July 31st. So lost on the put spread, as you can see, open for 220, close for 246, but won on the call spread. So it looks like it was an iron butterfly. I don't know if it's earnings related either, because it's just one day, but definitely 261 means he was pretty close to the current market price. So UPS July 30th, let's see what it was trading at. Yeah, 141. And July 31st, it moved to 142. So definitely very aggressive, but ended up winning on the call spread, but lost on the put spread. But overall, made a profit of $310 on that UPS trade, because he did two contracts. So the pattern I'm seeing is that he's placing, if we just look at his losing P&Ls or losing trades, so these are his losing trades only. So put spread, iron butterfly, iron condor, call spread, call spread, call spread. So you can see it's mostly the ones that include a call spread. But now his winning trades, all his trades with profits, they're mostly put spread, put spread, put spread, put spread, iron condor, put spread, one call spread. But you can clearly see that they're mostly put spreads. Probably the fact that the market is rallying, it helps that put spreads are winners right now. But you can see all his winners are, and you can see his underlyings: CRM, Costco, Adobe. So big name companies: Tesla, Baba, Visa, Microsoft, Netflix, Q's, Baba, Nvidia, SPY, a lot of SPY, Alta. So probably some earning trades as well. But a lot of these trades are one-day trades. So you can see, so these one-day trades, if they're not far enough, I'm not really a fan of, unless they have earnings. So volatility is high. But just making an assumption on one day that a stock will not drop below a certain price could be a little bit risky, because if it does, you don't have enough time to collect credit from this call spread, and you could end up closing for max loss, and the credit received might not be high. And as you can see on this trade, for example, $1.02, that pretty much means he's very close to the current market price. So let's check it out. So 109 is a short strike on Abbott, August 27th. So August 27th, it was at 111. And he sold a put spread at 109. So only 2 points away with 1 day expiry. And the next day it dropped a little bit, but stayed at 110.75. So a bit gutsy. It worked, but a little bit gutsy in my opinion. This is definitely not a trade I would have made. So let's look at his biggest loser and his biggest winner. So the 510, I think we saw. Actually, we did not see the 510. So that 1 day trade on Abbott was his biggest winner, actually, for $1.02, expired worthless, and did 5 contracts. So that is crazy. I would have never done that. 5 contracts on a 1 day trade and only 2 points away from the current market price. That's very gutsy, and it ended up being his best trade. And his biggest loser was $722. on Disney. It was a call spread, 119, 124, collected $1.34. So from August 4th to August 7th. So let's see what Disney was trading at on August 4th to see why he picked the 119 strike. So August 4th, Disney was at 117. And then August 5th, it was at 127. So yeah, looks like it must have been earnings. August 4th, Disney's at 117. And then August 5th, it's at 127. But his short strike was 119. Yeah, so it was only 2 points away from the current market price. So that's not giving the trade a good chance. Collected $1.34. So collected a lot, but only 2 points away. So it was very risky. Let's see how many contracts he did. He did 2 contracts and lost $722. So this one could have been easily avoided. I don't know why he would only go 2 points away. I don't know if Disney had earnings August 5th. Maybe that's why. So probably it had earnings and he made an assumption that after earnings it would drop. But it looks like it just went way up after earnings and destroyed his call spread. I generally do not like call spreads. I've had bad experiences with call spreads. I find put spreads are better or have better success rate. So yeah, August 4th was earnings, last earnings. So he placed this trade August 4th. So it looks like it was an earnings trade and he made an assumption on the direction and it totally backfired. So he actually made about 115 trades, closed trades. 97 were winners, 18 were losers. So 84% of his trades were winners, 16% were losers. Which means that if he was going at the 84% probability of in the money strike, that means the probabilities ended up being right. But he was actually going smaller. I think he was going maybe 70%. I don't think he was going far out of the money based on the trades that I looked at. But regardless, he still made 84% winning trades. He made a P&L total profit on his winning trades was $16,000 and his losing trades he lost $3,200. So still made. So what I'm concluding is, or what I'm learning from this subscriber is definitely to keep on placing more trades. Even if you've got losing trades, just keep on placing more trades. I'm getting confirmation that put spreads are better than call spreads. And I'm also learning to do more contracts. I'm definitely going to do more contracts after seeing his trades. Because I mean, he has less capital than I'm playing with and he's making way more profit. So definitely I'm not using my capital efficiently. That's something that I'm learning from this subscriber. So I got to be a little bit more aggressive, do more contracts. I'm going to keep the same strike selection. I like to go at expected move strike, which ends up being a 20% probability of in the money. I noticed that his strike selection is a little bit more aggressive because he's collecting a lot of credit up front. But I like to collect in the 80-cent range, 80 to $1 range, as long as I'm at the expected move strike. So as you can see, he's always looking for stocks with high volatility, whether it's because of earnings or just high volatility in general, and selling put spreads. His biggest winners are put spreads. So very interesting, very inspiring. Definitely learned a lot actually from this. So you can see he started off slow, but as soon as he started making more trades consistently, not necessarily more contracts, but different trades with more contract, you can see that his P&L went up drastically. And here it's small just because I don't have all the trades. I don't have all the closed trades, but you can see what's to come. His highest week was August 28th, 39 USD profit for just 1 week. So I hope you learned something from this video. Share it in the comment section below. If you have any questions about this spreadsheet or the trades, just leave them in the comment section below as well. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.